Good morning. It's Friday, the 21st of January. I'm Joe Neighbour from Signal Centre, talking ball. Almost at the end of the week, one without Steve, but we've got another one of those to go. He's off again next week, enjoying a well-earned break. So let's get stuck into what's going on at the moment in the markets. It's been another interesting 24 hours in markets, particularly in the equities space. The big news being on the corporate side that Netflix expects to add just 2.5 million subscribers this quarter, a number that falls short of Wall Street estimates and would mark the slowest start to the new year for the company in at least a decade. Obviously, Netflix has some pretty huge expectations around it, given what we've seen over the last few years or so. So we have seen the shares of Netflix fall as much as 20% in after-hours trading, raising about 45 billion in market value as investors braced for the prospect that the streaming giant is entering a new phase of slower growth. Slower growth is still, pretty massive growth. 2.5 million subscribers is not to be sniffed at, but of course there are pretty massive expectations now on this particular stock, and I think probably for a lot of other tech stocks as well. So maybe we'll start to see a little bit of unwinding on some of these bigger names. And we'll also take a quick look at the Netflix chart when we come on to look at those in a moment. So stocks are slumping globally, it would seem. There was a late reversal yesterday, shaky earnings from Netflix and Peloton, and there's prospect of tighter Federal Reserve monetary policy. Also, tensions between the US and Russia are weighing on sentiment across the globe. Oil declined alongside other financial assets and commodities as the sizzling crude rally ran out of a little bit of steam, having hit 7-year highs. So just in terms of this geopolitical situation between the US and Russia, President Joe Biden said Russia will pay a heavy price if any of its forces move across the border into Ukraine, after earlier suggesting Western allies might struggle to react to a small-scale attack. From what we know, it seems as though the Russians have amassed about 100,000 troops at the border with Ukraine, despite denying any plans to attack. The sell-off in risky assets yesterday didn't spare cryptocurrencies either. They are sinking lower today and did yesterday. Bitcoin's nearly down by 4% as things stand at the moment, dropping to its lowest level in more than 5 months as risk aversion again swept across global markets. This is the largest cryptocurrency drop that we've seen in some while. And digital tokens overall shed some 1 trillion in value since the November peak, according to Bloomberg. So lots going on. So let's not waste any time and get stuck into some charts and have a look at what's happening. So first of all, I'm going to take a quick look at the dollar index. I need to share my screen, and then we'll move on to maybe some more exciting areas of the market that everybody's interested in at the moment. So dollar index trading within this bullish channel. Yesterday we saw a bit of strength, bit of an engulfing candle actually from the previous day's session. Bit of weakness so far today. Overall still looking pretty good. This big blue line here that we've got as support is doing a fantastic job, and while that remains to be the case, we are expecting to see higher prices. Euro dollar, that is really close to breaking down from this kind of flag pattern or consolidation pattern, which should signal a continuation lower in line with the dominant trend. Still looking for moves down to this kind of region here, which is 110.58. Got some support at 113.14 in the short term, which is holding for now, but we did yesterday post an engulfing candle, so maybe we are on the verge of a fresh breakdown on that one, and that again would be fresh evidence that we are seeing money flood into the dollar index as a safer haven asset as opposed to the euro. Taking a look at cable, that continued its decline yesterday in line with this dominant downtrend. We have failed at this 50% Fibonacci level at 137.05, and it looks as though we are continuing this corrective move following this sharp move higher that we saw between December and mid-January. Euro sterling, no let up on that really overall, though we are seeing a decent bounce back today. It's actually one of the better performing currencies so far. It's up by almost 0.5%, as you can see, a nice big green candle, but it is just retesting the underside of this bearish channel. Ultimately still looking for lower prices towards 82.75, so maybe this strength today does provide fresh opportunity for the bears to re-establish short positions and see lower prices. Aussie US dollar, that's struggling today, again following up from what we saw yesterday, which was increased dollar strength. So we did rally into a 72.75 resistance level, posting a bit of a shooting star candle yesterday. We're backing that up with further losses. We are still holding on to this corrective channel at the moment, but there is potential for this to break down and for us to see a continuation lower in price. Just looking at the right hand side of my watch list, you can see there are some bigger numbers being printed in the forex space today. Aussie Swiss, for instance, that continues to trade within a downtrend. One of the biggest losers on the session today is the Aussie dollar against the Swiss franc. So we're seeing some money move into the Swiss franc as a safe haven currency, which it's often referred to as. Similar situation with sterling as well. Overall, remains in a downtrend. Still, it looks as though investors are favouring the safer haven currency of the Swiss franc to the pound sterling. If we take a look at New Zealand dollar versus the Swiss franc, it's a similar situation. We're actually breaking to new lows there, as you can see on the daily chart. So again, yet more indication that people are avoiding riskier assets in favour of safer ones. So let's move on from currencies and have a quick look at cryptos, because obviously we know it's a well followed asset class, particularly among newer users in financial markets. So interestingly, we've seen a break below this key support here that we posted in September last year, and once again we tested that level in January. It's not a closing break. We haven't seen a close below this level. So therefore, there is hope that we could see the dip buyers step back in and try and push this back above the support. If we look at this downtrend blue line, we can see that overall the pressure is bearish at the moment and the bias is for lower prices. Below this support line at 39,600, we have a 50% Fibonacci retracement level at 36,429. If that fails to hold, then we'll be looking for a potential retest of the 2021 lows, which were around about $30,000. There's a big area of support here, as you can see on the daily chart. And this is the price action we were talking about in 2021. So a number of levels to be paying attention to here. The red line is a 61.8% fib level, which was respected almost perfectly on that pullback in June last year. And that 30,000 level obviously represents a nice big psychological round number, which again has done a very good job of preventing prices from moving lower. Will that be tested again in the next couple of months or so? You wouldn't bet against it, given the severity of this trend that we are currently trading in at the minute, and this kind of appetite to get out of riskier assets, it seems at the moment, across the board. Let's take a look at Ethereum. That's pretty much trading in line with Bitcoin today, both down by around about 3.85% at the moment. Ethereum is also breaking down through support at 2,928. Again, it hasn't been done on a closing basis, so there is potential for the dip buyers to be trying to get involved here and get this back above this support level on a closing basis. If there is any return to riskier assets today, then we could see that hold on, but there's a long way to go between now and the close of business. There isn't anything out really from the economic side of things on the data front that's going to change much today, so maybe we are going to continue to see risk aversion into the weekend, and that may then carry through into early next week. If we close below this level at 2,928, then we will get a test potentially of the next level of support, which is at 2,651, which is this previous low here from September. If that fails to hold, then there's a lot of fresh air for this to potentially move into. So the corresponding level that we talked about on Bitcoin was 30,000. On Ethereum, it's down at this kind of region, which is at 1,733. So these are levels that we need to be mindful of, but it's not over yet for Ethereum. If you can hold on to this more local support at 2,928 today, then there is scope for a potential bounce towards the 3,500-ish kind of level. Okay, let's move on to oil. So yesterday that retreated from hitting fresh 7-year highs. So we posted a new high, then we closed on the lows of the session. So what we formed there is a bearish outside candle, typically quite a potent reversal candle when seen at the top of up moves. So maybe we're going to see a little bit of a correction on oil wouldn't be surprised. It's obviously been moving higher very swiftly in recent days and weeks. So a little bit of cooling off there wouldn't be a massive surprise, and maybe that's a cue for some profit taking on oil in the short term. Overall, the outlook still remains pretty bullish, and I think we will see higher prices and maybe another retest of these 7-year highs at some stage. But at the moment, it looks as though we may be seeing a little bit of a cooling off in oil. If we take a look at gold, typically what we would expect here when we're seeing sort of a risk off move is for gold to actually come into its own. Hasn't really happened as yet. We did break through this resistance at 1830, as you can see here, this big green candle, which was really nice. So we saw a break up, and then we saw prices cooling off a little bit. So from a technical perspective, maybe what we're seeing today is a retest of that breakout line at 1830. So from the technical perspective, as a technical analyst, what I want to see now is this level hold as support. If it does hold as support, or even if it doesn't, I mean, if you're a speculative trader, you probably want to be buying into this support now, hoping that it holds and that we'll actually see a continuation higher, probably towards the next resistance level, key level in the market for gold, which is up at 1877. So that may be one that I come back to for a gun to the head trade in a moment. If we take a look at silver, well, that's outperforming gold, as it typically does when things are going well for the precious metal. So we've seen this clean breakout here above the 23.43 level. We've seen prices continue to move higher. Things are stalling a little bit today, down by just over 0.5% at the moment on silver. If we were looking at this from a technical perspective, what we'd want to see is a pullback to test this new support level, which has been created by the breakout, then be looking to buy that dip for higher prices. But not overly sure really on silver. Just eyeballing this, we can see that it has also had a break of trend here. So that is another positive sign really for silver, and indicates that we may see a little bit more strength in this market in the short term. Let's take a look now at indices. So FTSE yesterday, really big reversal actually, engulfing all of the previous day's session. We did actually make a new high yesterday in the FTSE, then closed much lower on the session. So again, we formed a bearish outside day candle on the FTSE 100 in line with this kind of uptrend, or the top of this kind of wedge pattern that's formed. So maybe we're going to see some sort of correction lower. So typically, not typically, but what we've seen recently from the FTSE is that's been held up predominantly by banks and mining and oil stocks. Obviously, we saw a sell-off in pretty much everything yesterday, so that all sort of come together to drag the overall market lower. FTSE is outperforming today, actually some green on the charts, up by 0.05% as things stand at the moment. If we compare that to some of the other European markets, the CAC 40 and the German 40, we can see that they're both quite a bit lower as things stand. So let's move on to the German market. This is the DAX. We are in the 5th day of selling so far. Obviously, this day isn't finished yet, so maybe there'll be some dip buys that re-emerge today. But for me, it just feels like we're a little bit in no man's land at the moment with the DAX. So we've got this big range that seems to be forming. We've clearly got some resistance up at 16,300-ish. So maybe we're going to see some further selling take place here, and for this price to remain in the range for the time being. Just a consolidation of price, which appears to be been ongoing for many months now, back to sort of May 2021. So let's move on to the US markets where things are really getting interesting. So we've seen a big break of trend on the Nasdaq. It's actually the tech stocks that are leading the way on the downside, not helped yesterday, of course, by what we saw with Netflix and the disappointing subscriber numbers, and also Peloton, which as a result of the pandemic flourished because of the orders to stay at home, people wanting to stay fit and buying all their products. But that wave now seems to have fizzled out, as it was probably always going to. So, that's not looking too great for them. We will have a quick look at that chart as well, actually. But in terms of the Nasdaq, we've seen a big breakdown of this 15,500 level, which is here at this blue line, and prices really haven't looked back since then. It's been a really clean break to the downside, and there's been no let up in the selling. In terms of this range that formed between the highs that were posted here in November at 16,768 down to the lower end of the range at 15,500. We've measured that move and we've come up with a downside target of 14,309. So that is where we believe prices could head to. Below that, we've got a key support here from these previous highs and the previous breakout level at 14,066. So into that sort of region is where we expect prices may go. Now, what we may be doing here in the Nasdaq is actually forming some sort of large top pattern. Now, these things take many months in some instances to actually complete and to build. So maybe we are in a process of forming a really large top on the tech market. So there will be opportunities to exit positions potentially without hitting the panic button. This is obviously what's causing this drop at the moment, is that I imagine there's a lot of fresh money because it's a well followed market, the tech stocks, and any kind of dip we tend to get big reactions from waves of investors who look to buy any dip that's offered by these tech names. So maybe we're actually seeing things level out a little bit here, and we're seeing a bit of a panic because there's a lot of money that's trapped up here that doesn't want to be losing money or can't afford to lose money. So we're seeing this reaction to the downside. Let's take a look now at the S&P 500 before we take a quick look at some stocks. Again, I'm sort of floating this theory that we're in the process of forming a top, or have formed a top in terms of the US markets. This may be forming some sort of head and shoulders again. Maybe this is kind of the left shoulder in the process of forming a head, and there's obviously a lot more to do on that. It's a very early and speculative call, but we've broken down through the trend line, as you can see, and we've also taken out this horizontal support at 4,508. So it looks as though we are heading lower, and I think lower prices are likely to be seen. We may see a retest of this level in the coming days and weeks, but it looks as though the pressure is going to remain on the downside for now. So the S&P 500 is the broader index in the US. This is what I would use as a benchmark for the health of the US economy. And it doesn't look great from a technical perspective at the moment, but things can change. We've seen these pullbacks previously, and typically they're bought up pretty quickly. So over to you, US citizens, and let's see if you've got the appetite to push this higher once again. Let's take a quick look at Netflix. We don't usually look at stocks, but Netflix is obviously a very popular asset amongst traders and investors. So we floated the idea of a double top actually completing back here in November, and we played that accordingly, and it worked out quite nicely. But since then, we've seen a continuation lower in price. As you can see here, we traded and formed a bearish outside day yesterday. So we've seen a pretty steep drop in price from those highs that we posted in November. So if we take a look at things on a longer term time frame, and this is something I was speaking to a client about this morning, just to try and put some of this into perspective really. This is the Nasdaq chart going back to 2013, 2012. So massive uptrend. It's been a roaring success for anybody that's owned this share, but obviously we are starting to see a little bit come off the top, and it's not unusual. We've seen this before. There are corrections in price. They are healthy ultimately in the grand scheme of things, and they need to be seen in order to create value for new shareholders to want to buy it. So overall, yes, we are seeing a bit of a slump. But again, if we draw out the chart on the monthly time frame, then we can see there are corrections that occur, and this is only 3 red candles in a row. We've seen it before. It's not unusual, but obviously people are starting to panic now because this is the first time in a decade that we've seen numbers underwhelm as much as they have on Netflix. But I just really wanted to put that into perspective. I don't think Netflix is going anywhere. I think they're going to continue to provide good quality television for us all. And there'll continue to be appetite for it. Where that may not be the case is something like Peloton. So this is the rise and fall of the home exercise market. I mean, it's obviously gone gangbusters as a result of the pandemic, but the realization seems to have now set in amongst traders that maybe this doesn't have much of a future, and there is only a limited amount of space in homes, and how many people can actually afford to own these pieces of kit when gyms still remain probably the most economic option. So doesn't look great for these guys. I did read somewhere that they was actually going to stop making bikes and treadmills, which is fundamentally their business model. So we'll have to wait and see what sort of turnaround plans they have here. But that looks like pretty much a basket case now, and one I don't think anybody should really be trying to speculate on. Let's just have a look at the percentage fall here. So yeah, we're down 86% from the highs. These things don't bounce back that quick, and that's one to be avoided in my mind. Okay, that's that. Let's move on to the gun to the head trades yesterday. So I had a stab at Nasdaq yesterday, but the risk reward wasn't particularly great. It was only a 2-to-1 shot that I was looking for. Yes, I saw a nice move in my favor. This was actually the 9 o'clock close candle here. It continued to move lower after hours, and it's still lower than where it would have been at 9 o'clock. So made just shy of 1 hour on that yesterday, which was nice. And yeah, let's hope. Well, let's not hope. I don't want to hope, wish ill upon people, because I know most people own this market on the long side. So let's have a look for some fresh opportunities today. I mentioned the idea of gold. And I think I'm going to take a look at this actually. So just flicking back to the daily chart on this, just to show my workings and theory. So yesterday or 2 days ago, we saw a break above this resistance level here at 1830. Nice clean break, nice impulsive move to the upside with that green candle. Bit of stalling yesterday, but a pullback to retest this support level. So now I'm hoping that this level is going to do a job. From a technical perspective, we're going to see some buyers step in at this support level and try and push that price higher back up to the next resistance level at 1877. Also, gold typically acts as a bit of a safe haven. So if there is further selling in riskier assets today, then maybe gold will get a little bit of a bid and we'll see higher prices. So let's just try and finesse that entry using the intraday chart. So this is the breakout level that I'm referring to. It's not exactly clean on the intraday time frames on the hourly chart, but this is kind of what I'm looking for, a retest of this kind of support zone, which seems to have worked so far. It's very early, obviously, to make that call, but so far I like what I'm seeing. So I'm going to buy it at 1832 spot 3. I'm going to hope that this does a job of holding. Now I'm going to put a stop at 1825 spot 8. And I was looking for a move up to that 1877 level. So would require obviously a very big move today. But as always with these markets, you've got to put yourself in the position where you are capable of landing these massive winners. So this would be a 6.6R return if it were to play out today. Very rare that these do play out within the kind of 24-hour time frame that we allow them, or even less, because we close them off at 9 o'clock. But it's not outside the realms of possibility. It can happen, and even if it happens once or twice a year, these big wins are what make the difference to your bottom line at the end of the day. So give yourself that opportunity and don't be scared to go for the big targets. So that's my trade for today. In terms of economic data, there isn't anything that's considered high impact today coming out. So we just need to see what sort of reaction investors have today to this pretty solid drop off in the US markets, whether or not they can stem the flow of selling, and what sort of reaction there'll be to things like Netflix as a result of the earnings yesterday. So do be careful if you're trading today. Looks like we could be in for an increased phase of volatility. So please use risk management. Please, don't get involved unless you have got a firm plan of attack and action if things go wrong, not just if they go right. So that's it from me for the week. I'll be back on Monday. Until then, everybody, have a great day, great weekend, and trade safe. Goodbye.